Welcome back, investors, to Ticker Time News. I'm Adam, and heading into Yum Brands, ticker symbol YUM, in their Q4 21 earnings report, concerns regarding inflation and labor shortages were front and center as these challenges continue to ripple through the restaurant industry. When McDonald's missed Q4 EPS expectations on January the 27th, investors were put on alert that cost pressures could have a more serious impact than anticipated. This turn of events reset investors' expectations, helping to explain why Yum brand shares have seen a rally lately, despite falling short of EPS estimates. Okay, before we get too far into Yum brand's earnings, smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click that subscribe button. Thank you, my friends, for doing that. As expected, rising commodity, logistics, and labor costs significantly impacted Yum Brands during the quarter. Total net cost and expenses climbed 10% to $1.39 billion, while core operating profit, it dipped by 1%. Unfortunately, Yum Brands' CFO doesn't see much relief on the horizon, projecting that operating profit growth in the first half of 22 will be constrained due to higher general and administrative expenses. However, this warning doesn't come as a shock since investors are used to the idea that inflation may actually stick around for a while. Instead of focusing on well-known issue that's expected to eventually ease in maybe a year or so, these positive aspects of Yum Brands' report are getting more attention. Led by an 11% jump at Taco Bell, the company's total same-store sales growth by 5%, which is pretty solid considering that Omicron variant and labor shortages created headwinds. Also, Pizza Hut's turnaround continues to gain traction as same-store sales, they were up by 3%. New product offerings like its Detroit-style pizza, increased marketing investments, and improved digital capabilities underscore Pizza Hut's rebound. Now, one negative positive was the increase in virus cases during the back half of Q4 was beneficial for Yum Brands, especially for its KFC brand. Instead of going out to dinner, many families opted for a take-home meal from KFC, which was reflected in its solid same-store sales growth of 10%. Yum Brands' substantial digital investments enabled it to withstand the unpredictability of COVID. Over the past 2 years, the company's digital sales have nearly doubled, reaching $22 billion in fiscal year 21. The company has pressed on the accelerator in terms of its restaurant expansion efforts. In Q4, Yum Brands opened 1,700 new restaurants, taking its total up to 4,180 for the year, making fiscal year 21 its strongest growth year in history. While operating within a very difficult environment, Yum Brands generated Q4 results that were better than feared. With the pandemic's grip seemingly loosening, hopes are rising that labor shortages, transit issues, and reduced consumer mobility issues will soon subside. One item to keep in mind, though, is that Yum Brands will begin lapping much more challenging year-over-year comparisons in Q1, when total same-store sales were up 9% a year ago. The tough comps may make for some weak growth rates going forward, especially in Q2, when Yum Brands grew by 23% during Q2 a year ago. Well, that's what I think about Yum Brands' earnings right now, but I want to hear from you. What do you think about their statement about not seeing inflationary relief on the horizon? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks lists and so much more. We've done the research so you don't have to. And if it's your first time watching, click that subscribe button. Thank you so very much for watching, and I will see you in the next video.